Hello, everybody. How's everybody doing today? Um, Taking a look at the week ahead here, let's take a look. We have big earnings this upcoming week, as we can see. We have United Health on Tuesday before the open. We have UPS, we have Boeing, we have Next Era Energy, Raytheon, American Airlines, General Motors, Union Pacific, Northrop Grumman. We have all those companies. Then after, we have Texas Instruments. Before the open on Wednesday, we have a very interesting company. One of my largest positions, ASML. Then we have Starbucks, GE. Then we have AT&T, MSCI, ADP, Tesla, Microsoft, Meta, ServiceNow, IBM. FICO can be interesting. Before the open on Thursday, we have MasterCard, Caterpillar, Lockheed Martin, Altria. Um, and then after the close, we have Apple, Visa, some good companies there. So let's take a look at the market this week. The market was down 0.63%. Let's look at the QQQ. Let's look at the NASDAQ. Taking a look at the NASDAQ, the market was down 0.42%. So the NASDAQ had a little bit of a better week than the SPY, which is the S&P 500, but the market wasn't doing great, didn't do great. Year to date, the market is up. Let's see. Yeah, both the S&P 500 and NASDAQ is up. So if we take a look, let's take a look at what company I might be buying soon. If you guys have any questions to ask me on any company, I can take a look at the stock, analyze it, and tell you guys what I personally think about it. Um, so yeah, let's refresh this real quick. Let's log in. Let's go back here. Let's take a look at the stock that I've been interested in buying. So if we type in, let's see. Let's not reveal what stock I'm buying just yet. So taking a look here at the stock, we have Sprouts Farmers Market. As you can see, the stock is down 51%. 51% in the past year. So this stock has been really doing bad. Past 5 years, though, the stock is actually outperforming the market. As we can see, it's up 220%. Some step stock analysis, this looks very good. We have 6 key metrics that are checks. The Ford P ratio, 12.38. That's a very low Ford P ratio. A Ford P ratio is just the price of the stock divided by the earnings per share. And this just shows you how much you're technically paying for the stock. So technically you're paying $12 for $1 of earnings per share in the next year. That's a pretty low valuation. The market trades right now at about a 20 to 25 PE ratio. So this is lower than the average market. I can take a look at Mercado Libre after this. I just want to show you guys why I'm interested in Sprouts Farmers Market. Return on invested capital, 12.2%. Revenue growth looks pretty good. EPS growth looks very good. Shares outstanding also look very good. They're buying back a lot of shares. I like that they have a nice buyback program. As we can see, the shares are decreasing over time. That looks very good. The earnings per share are really growing well. Revenue, everything looks good. Once again, if you guys have any questions about any stocks, I'll answer them. Taking a look at the debt to free cash flow, this is the only bummer here. 3.7 debt to free cash flow. This just shows that they're gonna buy. They can't pay. They can pay off all their debt in about 3.7 years. So it is a little bit of a good amount of debt, but it's not that crazy. Taking a look at the intrinsic value calculator here. Let's go over to Investing Pro and take a look at what analysts expect Sprouts Farmers Market to do. Um, if we type in Sprouts Farmers Market, let's take a look at the revenue growth forecast. As we can see, analysts expect about 14% growth this year, then 9, 9, 9, 10.5, 7.5. So analysts expect this company to grow about 9%. If we put a 9% revenue growth, then let's put 7 and then 11. All right. So let's do 7, 9, and 11 for the growth. Then future profit margin, I expect this company to be about 6% like it is today. So let's do 5, 6, and 7. Future PE ratio, I expect this company to trade about 15, then 18, then let's do 21. Shares outstanding, I expect them to keep buying back. And I get 19.4% return with Meta. So is Meta still an attractive buy after this week's sharp rise? Me personally, I believe so. Let me take a look at Mercado Libre just real quick, and then I'll show you guys why I think Meta is still a good buy today. Take a look at Mercado Libre. Mercado Libre is basically the Amazon of South America. So they're mainly in e-commerce, this company. Taking a look at the financial charts, this company is growing insanely fast, 30+%. So let's take a look here. CATL, we can take a look at that. I've never heard of CATL. Taking a look at the EPS net income, this is growing pretty fast. Mercado Libre. Taking a look at analyst expectations for this company, let's type in MELI. Taking a look at Mercado Libre, they're expected to grow about 37, 29, 21. As we can see, it's expected to decelerate pretty fast in the future, but I expect this company to still grow pretty fast. So for the revenue growth rate, I'm expect this company, let's just do 10, let's do 15, 20, actually let's do 12, 17, 22. Future profit margin, let's just do 5, 10, and 15. I expect them to increase their profit margin. Future PE ratio, this company probably deserves a 25 PE ratio. Let's do 35 and 45. Then if we calculate the intrinsic values here for Mercado Libre, we get about 13% return from today's price. So from today's price, it looks pretty decent. Let's take a look at Meta real quick. Let's put in Meta. Oops. Taking a look at Meta stock. Meta, $1.6 trillion market cap. The PE ratios are decent for a company growing this fast. Free cash flow yield, though, is a bit low just due to the compression of their free cash flow due to high CapEx spending. Net cash is not great, -$6 billion. If we take a look at the sub stock analysis, though, we get 7 out of the 7 key metrics. So that looks good for this company. Intrinsic value calculator. If we just kept these assumptions, honestly, I think profit margins, though, honestly, if I put what I think they could grow at, I'm going to do 10, 14, and 20, 10, 14, 18. So these are going to be decently aggressive numbers. Future profit margin, I expect, let's do 32, 37, and then 42. Future PE ratio, for the future PE ratio for Meta, I expect it to be probably about, let's just do 22, 27, 32. If we calculate the intrinsic values here, we get almost a 20% return from these aren't that conservative numbers, to be honest. These are pretty high numbers, but still, I expect them to do these numbers right here, and that's why I expect a 20% return from today's price. Let's take a look here. Let's take a look at CATL. So we have nothing here for this company. So that's interesting. Let's look it up. Maybe OTC market. Yeah. CYATY. I don't think I'll be able to analyze this company Let's see if it comes up. So here it does. It does come up, but it's all messed up. Yeah, I don't think I'll be able to analyze this one, but on my financial, let's see. I mean, honestly, it looks decent just looking at these numbers, but I can't really determine exactly just because of these numbers. Everything looks pretty good though. I mean, if you expect them to grow in the future from today's price, it looks pretty good, honestly. But it's on the Hong Kong exchange. It's really hard for me to calculate intrinsic value for this company. Let's look at DocuSign. DocuSign is pretty interesting in terms of valuation, I would say, I think. But they don't have any real good moat. DocuSign, most people probably know what DocuSign is, provides electronic signature solutions in the U.S. Market cap 11.5 billion. PE ratios are decent. For the forward PE ratio, it looks very good. Trailing 12 months isn't. Let's take a look. Profit margin really fell for some reason. Let's look up why that is. Why did DocuSign margins fall? Why did DocuSign margins fall? Put pressure in. So it's not telling us exactly why. I have a feeling this may be due to some accounting. Let's take a look at Google Gemini and let's just ask to see why. So asking Google Gemini, let's see. Looking at Google Gemini, it's analyzing this heavy investment in AI. I guess it's just heavy investment in AI. That's interesting. But let's just go to the intrinsic value calculator. Let's also take a look at what analysts expect this company to grow at. Let's go back to the charts. Let's see. Going back to the charts, let's take a look at DocuSign. DocuSign's expected to grow about mid to low single digits, so that's not great. Let's just do 6, 8, and 10. I think profit margin is going to be hard here. I expect it to be 15, 20, 25 though. I think this company can have high profit margins. PE ratios, this looks pretty fair to me. So if we just calculate the intrinsic values for DocuSign, we get about 9% return. So I wouldn't be buying, but also there is a lot of competition. And I think, honestly, I feel like a company could definitely buy DocuSign, like Microsoft or something like that. That would be a good acquisition for a company. Let's take a look at the next stock. Blackstone. Let's take a look at Blackstone. Blackstone, basically like BlackRock, I'm pretty sure. Yeah. So Blackstone is basically an asset management firm. Taking a look here, market cap 184 bill. The PE ratio is pretty high for this company. Net cash also doesn't look great. Financial charts just doesn't look. They had a real big spike here for some reason. That's interesting. Profit margin has been decreasing. 7-step stock analysis, 2 out of the 7. Is the revenue? Okay, so this doesn't. This is This is slightly skewed for the 7-step stock analysis because we have this 2021 number. So keep that in mind. So these growth numbers should be fine. The debt to free cash flow. Let's take a look. Free cash flow, 3.4 bill, 14 bill. So the free cash flow still would be an X. So not great. I think this might be a pretty hard company to analyze just due to the fact it is more of a financial company, because normally with this type of value calculator, you probably shouldn't be using this type of calculator for these companies. So let's just do 5, 10, 15. We're going to have a big range here. Future profit margin, let's just keep it at what it is. Future PE ratio, honestly, that could be good. Shares outstanding, good. Let's just see what this has to say. Negative returns. Do I think you're going to make negative returns on this company? Probably not, but I don't know about this company. Let's take a look at Dell. If you guys have any more questions about any more stocks, let's take a look. Let's take a look. Dell only, oh wait, no. Wait, that's the full year. Let's take a look at the 5-year return. I was like, I'm pretty sure that's a bigger return than that. Dell Technologies. Yeah, it's trading at a very cheap valuation, that's for sure. The thing I don't love is the net cash. They do have a lot of debt. That's a lot of debt. For the 7 key metrics, their revenue growth isn't great. Revenue growth isn't good, honestly. This company, I don't know. Wait, let's see what their profit margins are. About 5 or so percent. Let's do 4, 5. Whoops. Wrong area. 4, 5, and 6. Revenue growth. Let's take a look at what analysts expect, because I'm expecting low single digits for this company. Me personally, I don't like to invest in such slow growth companies. They're actually expecting mid to high single digits. So let's do 4, 6, 8. Future PE ratio, let's do 12, 16, and 20. Calculate. I have a feeling this could be good. 9.5%. So it's not terrible to me, but it's just not amazing. I don't like the amount of debt this company has. I don't think you'll go wrong with this company. Me personally, I wouldn't be buying it. Just look at the revenue. It's barely growing. That's something to be a little bit worried about. Also, since it's a hardware company, it's unpredictable. It's more unpredictable for their future growth. Let's take a look at Hut. Let's take a look. Let's go to the overview. Let's take a look. Why isn't this working? Okay. Hut 8 Corp. Energy infrastructure and Bitcoin miner. Profit margin 115%. So they had to have some accounting thing or something. That's weird. Their net income was higher. Their net income is higher than, let's see. Let's see what they have to say. If you guys have any more stocks you want me to analyze, I'll take a look at it. That's why. So it's basically just because Bitcoin was up and they report that as a gain. So I'm not going to analyze this stock, because basically if you want to invest in this company, you just have to, do you think Bitcoin's going to do well? That's the main thing you just have to do. I don't think you can really value this company, but let's take a look at ENOV and then take a look at Public Storage. Let's take a look. Medical technology company focused on developing clinically differentiated solutions, prevention and recovery, orthopedic solutions like braces, hot and cold therapy, bone growth. Free cash flow yield looks very good. There is, see, there's a lot of debt, guys. Look at this debt. Net cash, negative 1.41 billion. Negative $1.41 billion. Market cap is less than their debt. That's a red flag to me. Look, yeah, I'm just not going to analyze this company. Look at their net income. Look at their debt. Their debt is also insane. Me personally, I would stay away from this company. That's just my opinion. Let's take a look at PSA, Public Storage. So it's going to be hard once again to analyze these stocks because since it's a REIT, the accounting is different. So for a valuation metric like this, it's very hard to analyze a REIT like this. REITs, the main way you can analyze a REIT is just take a look. Like if you want to analyze a REIT or any more finance-based company like a bank, like Bank of America, JP Morgan, take a look at the book value, and then that's what the main thing you have to look at. So with that being said, looking at Public Storage, let's look up, search for a metric. Let's see. What book value per share. Let's just look at the price to book. So their price to book is looking pretty decent. They're expected to grow pretty slow, though. Honestly, if you just want a dividend, this company looks decent. The price to book, though, let's see, past 10 years. So it's not bad. It's not good. I would like to see this in the 7 to 8 range for the price to book. So from today's price, I mean, I don't think you would go wrong with this company, but it's just hard to value a company like this. The main thing you just want to look at is the book value. Let's take a look at Micron, or let's take a look at this company. I can't say that company. Let's look up. Let's take a look at what the stock is. XIACY. 120 bill. The free cash flow yield looks insane, if that's accurate. Free cash flow, though. What does this company do? Sales of smartphones. Once again, I'm not gonna say what I think just because for a company like this, I have no clue. I'm gonna be completely honest. Since it's a Chinese company and it's only traded on the Hong Kong exchange, it's gonna be really hard to determine a fair value price. But let's just calculate the intrinsic values here. Let's just see what it has to say. It says about 11% return, which makes sense for a company like this. I'd expect market average returns for this company. Let's take a look at Micron, then Hertz, and then when did you start investing? I started investing when I was 13 years old, I think. I started investing on my own, though. When I was 13. But I started to learn investing technically when I was, say, it was like 2018, so when I was 10 years old. Let's take a look at Micron. So you're saying that Dell is expected to grow faster? Well, number one, if you're saying the EPS growth, so let's take a look. Let me show you here. Let's put in revenue growth forecast and then EPS. Let's see, EPS growth forecast. So the EPS growth is going to be automatically higher. The reason for the EPS growth going to be higher is due to the fact that they're buying back shares. So they're buying back shares at 2 to 3%. If they're buying back shares at, say, 2%, they're buying back shares. That's automatically going to increase their EPS. But I already factored that into my calculations. So with that factored in, that's already taking into account those buybacks. So the discrepancy here of, say, 2% over the next few years, that's just mainly buybacks and profit margin increases. But I already counted that into my fair value price. And also, if you're looking at EPS growth over the past next 3 years, then you are going to see about 10%. But analysts do expect this to slow up, decelerate in the next coming year. So that's why I don't think over 10% for Dell, just because they're going to definitely decelerate in the future. And also the buybacks do account for the EPS growth. That's why it's higher. Whose money did I invest? At 10 years old, I invested. Basically, I helped my parents invest. Then when I was 13, 14, I think 13, I got a custodian account, and just all the money I had, I just invested it. So all the money I've just received over time. I also worked a little job a little bit to make some money on the side, and then now I make money from YouTube. So that's how I get money and invest, and I make more money from investing. Take a look at Micron. This company has had a crazy run up, and I said in my last video, this company looks interesting, but I just didn't do enough research, sadly. I think I made the video when it was $160, and it's at $400. This company is going crazy. The problem with this company is going to be very hard to value just due to the cyclicality of this company. So if we put in, say, let me see. Let's see, Micron. Let me show you the past revenue growth and then the future revenue growth. So revenue and EPS growth forecasts are expected to be very fast. But look at this, -20. Like, see what I'm saying here? Analysts don't know really where this is going to go in the future. So it's going to be really hard to determine a fair value price for this company. Let's also take a look at the revenue growth. Take a look at the revenue growth. Look at this revenue growth. See what I'm saying? It's going to be really hard to determine Micron's fair value price just due to the fact of how cyclical this company is. Let's just do 10, 15, 20. Future profit margin, guess we can just leave it there. Future P ratio, let's do 20, 30, 40. Calculate. Get about an 8.7% return from today's price. Do I play any games? No, I don't play any video games or anything like that, honestly. I haven't played video games in a long time. Let's look at Hertz. Then we'll take a look at FSLR. Whoops. Let's take a look at Hertz. Why is Hertz not coming up? Wait a minute. Did they? Wait, that's why. I thought their ticker symbol was HRTZ. So here's Hertz. Me personally, I'm probably just going to stay away from this company just based on the fact that they invested so much into EVs, and taking a look at this net income EPS, it just doesn't look good. The free cash flow is negative. What do I think of option trading? I dabble in option trading, but honestly, so option trading daily, I would probably not recommend. I don't really like it, but I would say if you have enough money to, say, sell puts or sell calls, then I would do that, because this is going to be pretty complicated, but let me try and explain this as well as possible if you don't know what options are in the chat. Options is basically a contract that gives you the right to buy 100 shares or sell 100 shares. It just gives you the right to that 100 shares. So if you sell puts, one good benefit with this is you're going to actually get a premium, it's called. So you can have the strike price. So if you wanted to buy, say, I don't know, Google at $300, you can sell you can sell a put at $300, right? And you'll be getting an actual certain rate per share. Say it's like, I don't know, say it's $2 premium. You'd make $200 from that contract. And if the stock doesn't go under it, you keep that $200 and you don't have to buy the 100 shares. But if it goes below that, you're going to have to buy those shares. And you do get the $200, but you have to buy the shares at $300. So say Google dropped to 150 and you're stuck with that 300 share price, you're going to be down 50%. But here's the thing, if you're already going to buy the stock at that $300, then why not just buy the put? You're going to make potentially extra money off of that. So if I were able to buy 100 shares of Google, I would definitely be doing this, but I don't have enough money for that. That's the problem. If you have to have enough shares to buy at least 100 shares, be comfortable buying 100 shares. So I think selling puts are definitely a better way, I would say. You can also sell calls with, you would have to sell the stock at a price you're willing to sell it, but I would definitely more go towards selling puts. You could definitely do calls though. But sadly, I don't have enough money for that. If I did, I would be doing that. Let's take a look at FSLR, and then I will take a look at Union Pacific. How many companies do I have in your portfolio at this moment? I have 4 companies. I know. Only 4 companies. I don't believe in huge diversification because if you can find a few good companies, why not just invest in it? So, that's just my opinion. The 4 companies I own, what upside would I miss for Hertz? Like, I'm just wondering. I don't think I'm going to be missing much upside for Hertz. That's just my opinion. Let me see. I don't see what upside you're going to get with Hertz. The company's not growing negatively. So that's my opinion. Let's check some real. Let's take a look at FSLR, First Solar. Then I'll definitely take a look at Union Pacific. Market cap $25 billion for First Solar. The P ratios look pretty good. The net cash also looks pretty good. Financial charts, everything looks pretty darn good. Hold up. This looks pretty good for this company. The thing I don't love is the negative free cash flow. What do you mean you'll miss the upside by selling puts? When you sell puts, that means you're going to have to buy the stock at a certain price. If you mean calls, then yeah. But see, the mindset about it is if you're going to sell or buy a stock at a certain price, why not just do it with options, even though you're going to potentially miss out on more upside or more downside to buy more? You might as well just buy it. That's just my view on it. Might as well buy it at the price you want. If it goes down more, you keep selling more or selling more puts. If it keeps going higher, then you keep selling more calls. That's just my opinion. With First Solar here, let me just take a look at expectations for First Solar. First Solar is expected to grow, I'd say 10%. Let's do 8, 12, 16. Don't be sad about your misjudgment on Dell. What do I have to know? You do your own research and you buy your own stocks. Don't listen to me, guys, please. I just want to teach you a process on how to analyze stocks. I don't think Dell's a bad buy right now, but would I be buying it? Personally, no. But just please do your own research, and if you truly believe it'll do good, then why not buy it? Even if I say it's the worst company out there, if you believe it's going to do good, do your thing. But my biggest philosophy in investing is basically, let's say, let me try and have some words here. My biggest philosophy is I'd rather invest in fewer companies to try and get a good return than say try invest in a bunch of companies and potentially in case missing out on those returns. I guess that's what I'm trying to say. It's not coming out very well, but yeah. Yeah, but if you sell puts, you're going to be selling at the price that you want to buy the stock. So say you wanted to buy Adobe at 300, say it's 250. Say you don't think it's worth the valuation today, but you want to buy at $250. So it's right now at 300. You think it's worth 250. You're going to sell a put at 250 no matter what because you think you're not willing to pay this high of a price. Um, that's the main thing because if you get a valuation, say for, I don't know, Meta, I would be buying this. I'd be willing to buy that company under 700. So yeah, Warren Buffett says you don't need to have a great diversification. So let's calculate the intrinsic values for First Solar here. 14% return. So not bad, honestly. Might be interesting. Let's take a look at Union Pacific. So yeah, let me put a poll in the chat. Let's try this out. Let's start a poll. Um, okay, so let me ask you. Um, let's ask a question. Do you own? Let's see. I want to see what you guys think about this. Do you guys own Google stock? Because that's my largest position. I just want to see if you guys have it. So yeah, let's take a look at Union Pacific. This company's probably just going to be overvalued. I know they trade at high premiums compared to the market, even though their growth rates are basically nothing. Um, that's just what I think. Looking at this, me personally, I think you can just buy better companies out there and make a greater return. I did own Union Pacific for a little bit, but the more I realize how kind of this company is, like, there's no real reason to buy a company like this when you can buy other great growing companies. Like, look at the valuation we get here. 0.7% return base case. So it looks like 50-50 split between owning Google or not. That's crazy. Let's do another poll. Um, let's see who owns. Let's see. Let's see what you guys own of this company. Let's see. If you guys want to go check out my newest video, 3 insanely cheap stocks to buy now for huge returns. So I think that was a nice video I made. If you want to go check that out, 3 insanely cheap stocks to buy now for huge returns. Yeah, me personally, I did trim my position in Google. honestly. I trimmed my position a little bit, but I still think the company should be my largest position. I don't see a reason for it to not be. Um, let's actually go analyze Google to show you guys what I think we can make from today's price. So this is very interesting that more of you guys own Adobe than Google. That's pretty interesting. I mean, I would say that is more value investing orientated. So, um, kind of makes sense. But let's take a look at Google. Let's show you guys this. Financial charts, Google, obviously amazing. Let's also look, let's type in Google. Growth numbers. See, they've been growing like crazy over the past few years. Looking at analyst expectations for future growth, they expect 12% or so. EPS is expected to grow really fast though. That's probably just due to their buybacks and potential profit margin increases. So if we put in Google, honestly, we could put 12% here. Let's do 9, 12, and 15. Future profit margin, let's just keep it the same. We could actually do it slightly lower, honestly. Let's do 28, 31. The reason I'm saying this is because this does include an investment. So technically it's not actual net income. But yeah, future PE ratio, I expect them to trade at a pretty decent premium. Let's do 22. Let's do 22, 26, 30. If we calculate the intrinsic values from today's price, I get 9.2% return. So I'm not buying Google today. I sold just a little bit, to be honest, but it's still my largest position. It makes up 38% of my portfolio. So I don't see it going anywhere anytime soon. I don't see myself selling much more at all. And the only shares I sold were the higher average price ones. So my average price went from 175 maybe down to 150 because I did buy more in the mid 200s. So I decided to sell those, make some profit, and just hold the ones I bought all the way back in 2024 and before that. Yeah, that's the same exact thing I got. I analyzed with the price today. I expect 9% return, and my average price right now is 151. I did sell a little bit, trimmed it, but yeah. Do you guys have any more stocks you want me to analyze? Let's see. Hmm. Let's take a look at Taiwan Semiconductor. How long am I gonna be live? Honestly, normally an hour, so maybe 15 more minutes. So yeah, that's just my. I try to stay on for an hour to an hour and a half. I've been trying to live stream as much as possible to engage, be more engaged with you guys. Taiwan Semiconductor, 1.74 trill. Free cash flow yield is insane, but I think those metrics are mainly from non-conversions. The reason that's so high, I'm assuming, 35, yeah. It's because for some reason it didn't convert here. Yeah. So for some reason this is still stuck in the What do you mean? What is my opinion on private equity firms and those that do mergers and acquisitions? Are you asking if it's um good for the market, or what are you trying to ask? Yeah, we can take a look at Procter and Gamble after. Taking a look at Taiwan Semiconductor. Let's see what analysts expect. They expect pretty fast growth, 20-ish%. Let's just do 10, 15, 20 to be on the conservative side. Future profit margin. I mean, the problem with these companies, like I've said, is just, will they be able to withstand this growth? Or this is the hard part with these chip companies. Will they be able to withstand this growth? Will they be able to withstand these profit margins? If they can, then great, but who knows if they can. Calculate the intrinsic values for Taiwan Semiconductor. Okay, I have no clue what. That's why I was like, what the? I was like, how did that happen? 71% return. I expect 15%. So honestly, Taiwan Semiconductor could be interesting. I just think the problem is it's a lot harder to predict these type of companies like Taiwan Semiconductor. The reason I say this is just due to the cyclicality of the chip makers and semiconductors. It's going to be really hard for you to basically analyze these companies compared to a company like Microsoft or a company like Google. Those are much easier to predict. Let's take a look at Procter and Gamble and then Grab. I've already taken a look at Grab, I'm pretty sure, in a past stream, and I thought it was me personally, I wouldn't invest in it. And I already know for Procter and Gamble, this is just going to show overvalued. The reason I say this is 22 current PE ratio. Look at how slow they're expected to grow. This company is growing at basically inflation rates, and that is a red flag to me. I just don't see the reason to invest in such slow growth companies. As we can see here, they're expected to grow 3-4%. Let's just do 2, 3, 4. I don't expect them to grow any faster than that. So with the profit margins, I expect them to stay here. Future PE ratio, though, this is where it gets tough. The reason I say this is because technically if a company's growing like 2%, their PE ratio should be like 10, right? But this company does have a pretty big moat. It's a big brand. So with that being said, let's just give them a decent premium here. 14, 16, 18 with this growth rate. Calculating the intrinsic values though, like -2%. Do I think this company is going to get -2% returns? I highly doubt it, but it just seems like there's no reason to invest in this company. That's my personal belief. What you basically need is to withstand this current PE ratio. The one thing I want to look at is let's take a look at Procter and Gamble's PE ratio in the past. Let's take a look. PE ratio. So the PE ratio is orange. I mean, they've always traded at a 20 PE ratio. Let's go 10 years. So they've been trading at a 20 PE ratio. Let's take a look here. Okay, why is this not working? So do I have any friends with the same interest? Not really. Not really with any of the financial interest. So yeah. Let's take a look though. Do we not have the PE ratio here? That's interesting. I just want to go back and see what the PE ratio for Procter and Gamble was. Procter and Gamble PE, where is it? Let's just look. It's got to be here somewhere. Why is it so hard to find? PE ratio. See, their PE ratio has just been continuously increasing. So me personally, I just think they're at an elevated price for no real reason. That's just what I believe. Let's see. What do you think about Bull? Then we'll take a look at AMD. Bull. I'm already going to say probably not. I think Robinhood and Webull are just very high valuations, but what's interesting is look at the amount of cash this company has. So maybe it is interesting. $2 billion in cash, but negative $500 million. Negative $500 million in net income is kind of crazy, guys. That is insane. Let's take a look at Robinhood's profit margin, because for this to work, we have to see the profit margins for the future, what it could be. Their profit margin's 52%. I'll analyze T-Mobile. I've actually been kind of interested in T-Mobile, but I do have to say I think the debt is just really scaring me away from that company. The amount of debt these telecommunication companies have are just crazy. I mean, insane. Like, look at Verizon. They have $160 billion in debt. $160 billion is just crazy to me. Using the intrinsic value calculator, though, I think Webull is just really hard to analyze, and I don't know. They're expecting high growth numbers, so let's just do 15, 25, 35. The profit margins is where it gets really hard because they don't have a profit margin right now. Let's just do 5, 10, 15. And with these numbers, you're going to get a good return. I can almost guarantee it. It's just really hard to analyze companies that don't have a profit. So with this calculator, I mean, see 11% return, and I think these numbers are kind of crazy. You're expecting them to become profitable. Wait, are they profitable now? Hold up. Why does it say the profit margin 6%? That's interesting. Do I plan on making my portfolio bigger? I would like to. And I think Sprouts Farmers Market is an interesting company to look at. But honestly, there's just not much opportunity in the market to me right now. That's just what I believe. Like, it was at 3. It was actually at 2 at one point. 2 companies, Google and ASML. Now it's Google, ASML, Meta, and Adobe. I would like to diversify at least a little more. I would say 5 to 10 companies is 5 to 8 companies. I would say is a good sweet spot for me since I'm so young. I can be willing to risk that. Let's take a look here at what company were we looking at? AMD. Let's take a look at AMD, guys. AMD. And then we can take a look at T-Mobile. See, AMD is just really hard to analyze too. Like, analysts expect them to grow crazy fast. So if we take a look at AMD, Wix took 20% since last time we discussed it. Is Wix down 20%? More? No. Is it? No, it's up 20%. Is it? It's up 15%. Yeah, I said I was going to do more research. Yeah. Let's take a look at AMD. Take a look at analyst expectations, though. Look at this. 30% growth they're expecting. If that's true, let's do 15, 25, 35, honestly. Like, if that's true, then I expect this to do very well. I mean, profit margins, I'm assuming, go up a good amount, too. Future P ratio, you have to be paying a good premium for this company. 30, 45, let's do 60. Shares outstanding, though, they're really selling shares. I mean, from today's price, I get negative returns, even with great numbers. I mean, if you believe they do, let's say, do what analysts expect. Let's do a 50 PE ratio. I mean, I could see mid-single digits from today's price, but I wouldn't be buying from today's price. So, do I have any family member who is in the financial sector? No. I don't think I have any. I mean, maybe I do, but I don't think so. Not that I know of, that's for sure. I just really enjoyed it. Read books, watched videos, just did a bunch of research. I just really enjoy it. I mean, what's not to like? You can basically make money without working. I mean, you can just, if you're really good at researching something, you can make money off of that. Let's see. What company was I gonna look at again? Let me see. Yeah, T-Mobile. T-Mobile. Taking a look at T-Mobile, I think if you are gonna buy a telecommunication company, it would be T-Mobile. But once again, look at that debt, guys. It's insane amounts of debt. 15. It would take them 15 years to pay off all this debt. It's the one thing that's keeping me worried with this company. The amount of debt this company has is disgusting, honestly. But I do think that T-Mobile, if you were to invest in one of them, it would be the one. So they're expected mid to high single digit growth. Let's do 4, 6, 8. Future profit margin, let's say it stays the same. P ratio, let's do 14, 17, 20. Okay, what happened here? Why did this do this? Let's put this in again. 4, 6, 8. What did I say again? 14, 17, 20. 8.4% return. It's nothing crazy, but it's not bad. Yeah, I did say Pfizer, even though the valuation looked good, guys. This is what I also want to preference, I'd say. Just because a company's valuation looks good does not mean you should be buying that company. Honestly, the most important thing is the fundamentals, then the price. That's my personal belief. Just because I'd rather buy a company that's insanely good and even slightly overvalued than a company like Pfizer or a company that's just terrible fundamental wise. That's just my personal belief. Even though Pfizer, I mean, let's analyze Pfizer. Let's see. Is their ticker symbol FISV now? Yeah, I think so. Let's analyze this company. What? Maybe I have to put in the old ticker symbol. If not, I'll do it on a spreadsheet. So yeah. Let's actually analyze Pfizer stock. Other poll. What should the poll be, guys? Let me know what the poll should be. Let's go and find the intrinsic value calculator. Let's put in Fiserv. Okay. Let's see. Let me go see how much revenue is Fiserv got now. How much Fiserv revenue? 5.26. That's not annual. 20.45. 20.45. 24. Whoops. Let's decrease that. Wait, that's 20 point. Whoa. That extra zeros there. Okay, guys. So let's see if this is in screen. Let's see. Yeah, you guys can see this well. So for Fiserv, let's see the annual revenue growth. I'm expecting mid to low single digits for this company. As we can see, yeah, 3-4% growth. Let's go over to hit this. Let's do 2, 4, 6. Future profit margin. Let's look up the profit margin. So 17%, but I'm pretty sure that they're expecting it to decrease. So let's do 12, 15. Whoops, this is not in percentage. Whoa. 12%. Put that in percentage. Whoopsie. Then let's do 18%. Future PE ratio. I expect this company to trade at very low PE ratio. Let's do, I'm thinking 10. Thinking 10. Okay, so I actually just messed something up here with the net income. How did that work? Why did the net income do this? Let me figure this out. Let's re-put this in. Okay. That's why the annual revenue growth, guys. That's why it's messed up. It changed from that 2, 4, 6. Let's do, what was I going to do? 12, 15, 18. Future PE ratio, I expect 12, 15, 18. And even with Fiserv today, still doesn't look appealing to me. That's my opinion. With the company growing this slow, I just don't see the point, honestly. And with the amount of debt this company has, it's just, I knew it was something that you gotta just watch out. That's what I want you guys to learn. Just watch out when a company has a lot of debt or something's wrong. You just have to be careful. Let's ask what the best stock to buy now is. Let's do Amazon. Let's see what you guys think. Adobe, good buy. Me personally, I think Adobe's a pretty good buy. That's my opinion. Taking a look at Adobe here. Everything looks good with the company, growing pretty decently. 7 out of the 7 key metrics. Growth numbers, let's put in 7, 9, 11. They're expected to grow at about 9%. So I think 9% is fair. Future profit margins, let's do 25, 28, 31. Future P ratio. This company, I think, deserves a pretty good premium, honestly. I think 18. Honestly, you could do 22. 26. With these shares outstanding, get almost 17% return. Let's take a look at Supermicro computers. Yo.
You want some rice?
No.
Are you planning on eating some rice today?
No.
Okay.
But I'll try it.
Well, cause like the minimum you can put in it, I'm pretty sure, is like a cup, and a cup of uncooked rice is like 2 cups of cooked rice, and that's just too much rice for me. So you want some? There's extra.
Alright.
Otherwise, I'm just gonna put it in like a container or something.
I'll have some.
Okay.
Yo, say hello, bruh.
Hello.
This guy. Wait, let me show you.
Are you still streaming?
Yes.
Oh, my fault.
Look at him. Oh. Y'all. This the roommate.
What's up?
If y'all see him, say hello. He's in the corner right now. I mean,
Hello. Hello.
okay then. Bro's asking if I want rice.
Nah, I thought you were done, bro. My fault.
Bro's asking if I want rice.
My fault.
Nah, it's all good. Bro, they're asking you for some stock recommendations, bruh. Wait, let me get this right, guys. What a great appearance by Corey. Yeah, this guy is not no finance guy. That's all I gotta say. He's a engineer. He's got that. About to be in the Air Force. So yeah. Let's get back to the stocks. SMCI. Let's take a look. Yeah, let's just say he hasn't had a good history in the stock market. Let's just say that. This is what happens when you don't ask me, so I mean, let's see. Financial charts. SMCI, once again, it's a company that's going to be hard to basically understand. Like, what I mean by that is the future of this company. It's going to be hard to predict their growth. I'm expecting, man, this is going to be tough. 10, 15, 20. This could be too much, too. Profit margins are insanely low. That's interesting. Man, I'm surprised their margins aren't higher. Let's do 3, 6, and 9. Yeah. Future P ratio. Let's do 20, 30, 40. Man. From this looks crazy, but these assumptions could be too much too. It's just hard to tell with these companies. I think you just gotta do more research. So yeah. So you guys have any more stocks, or I think I might end it here. So my calculator is based on EPS mainly. I mean, technically, it is EPS when you think about it. Oh wait, let me take a look at GDDY. That's GoDaddy, right? What do you guys think is a good time to be doing these lives? When would you want to be? And I'll try doing it on Friday. I think Friday is probably the best day, or Sunday is a good day to do it. GoDaddy. The debt is a bit much, but the growth numbers look decent. Everything looks decent besides the debt. Let's just use these numbers to calculate the fair value. Let's do 12 PE, 16, 20. So looking here, we get a 9.4% return. So not bad, not amazing. And yeah, let's take a look at Tesla. Yeah, me personally, Tesla I think is pretty overvalued. Yeah, so I think I'm either going to try and do Fridays or Sundays, but what time would y'all want? That's what I'm asking. What time, what day? How about that? What time or day would y'all want me to do? Let me put a poll. Let's see. Let's do. Okay. Yeah. What company went? Tesla. Tesla. Taking a look at Tesla here. They're expecting 62% revenue growth in the future. Man, I don't know if I can believe that, but let's do 15, 20, 25. Might be high, but so also I'm gonna be let's future profit margin, we're gonna do 10, 15, 20. These are very aggressive numbers too from today's profit margin. Looking at the profit margin, it was at 15% before, so yeah. Future PE ratio 30, 40, 50. Calculate. And these are aggressive numbers, mind you. Even with these aggressive numbers, I think it's a bit overvalued. That's my opinion. With these aggressive numbers, I mean very aggressive numbers, me personally. Let's check out Pinterest. Pinterest I've done on multiple occasions, and the thing you have to realize for Pinterest is their profit margin shouldn't be this high. What I mean by this is what I mean by this is What I mean by this is the profit margin is not supposed to be 48%. They had a tax benefit, which has increased their profit margin. As we can see, the EPS went crazy. Their actual profit margin should be about 10 to 15% max. So let's just put 8, 13, and 18. Future PE ratio. This company, 20, I think is fair. 20, 25, 30. Calculate the intrinsic values. 3.8% return from today's price. Their profit margin could definitely get higher, though. I would say 17.5. Let's just meet in the middle. I mean, 10% return maybe. So, yeah. What about MKC? I have been interested in this company, so I've actually been looking into this company. McCormick Company. Actually, wait, no. This isn't the company I've been looking into. I thought this was the same ticker symbol. Also, Vital Farms is interesting. I've actually looked into that company, so. Okay, let's just take a look here at McCormick. Once again, I think this is a company that just not enough growth. I mean, it's just not enough. That's my opinion. That's just my opinion, though. I don't think I should even analyze this company. I'm just staying away. I mean, if you really want me to, if I analyze it fairly, I think these are pretty bullish numbers too. Negative return. I mean, I'm just staying away personally. Vital Farms. What's their ticker symbol? I can't remember, guys. Is it just VTL? Vital Farms. Is it VTL? Yeah, VITL. VITL. Yeah, I've been interested in this company. They're growing pretty well. I mean, Vital Farms, if you don't know what they do, I'm pretty sure they just make eggs, butter, pretty basic things. But doesn't mean we shouldn't be buying. Just because they do basic things doesn't mean that we have potential to we don't have potential to make good money. So, VTIL. Wait. VITL. What am I doing? VITL. VITL. They're expected to grow 20%. I mean, if that's true, this would be good returns, but let's just do 8, 13, 18. Future profit margin 6, 9, 12. Let's see. Financial charts. Yeah, we could say it stays here today. Just looking at that. 20. Let's do 25, 30. These are pretty low valuation numbers, though. So, 15% return from today. What do I think of Poet? This is an AI stock, right? Like, it's mainly just AI. Oh no, I'm wrong here. I mean, me personally, with my philosophy, I don't like to invest in companies that are losing money. So, and with my investing calculator, it's not gonna really work. And I'm just not even gonna analyze it because you have to assume basically fake profit margins, like really hard to assume in the future. So there's no reason. Shift4? What's that company? Shift4 stock. 4. Payment process. How have I never heard of this? 4. Market cap 5.87. PE ratio 30. Free cash flow yield looks good. Net cash, though, this is the big worry. -$3 billion. So they have a good amount of debt, guys. A lot of debt. That's a big worry to me. Let's just look up what analysts expect. Analysts expect 26, 24, 20. About 15%. We'll do 10, 14, 18. Future profit margin is going to be hard to determine. Let's just say they do increase decently. I mean, I'm not exactly sure what they're going to do, but if we calculate 17% return from the base case. So you have to believe their profit margins will increase and their revenue growth is still growing pretty fast. The thing I don't like is the amount of debt this company has, guys. That's the only thing I don't love. The debt is a lot. It's a lot. Let's take a look at ARM Holdings. And if you guys have any more stocks, then comment now, because if you don't comment in the next few minutes, I'm going to end the stream. I've been live streaming for almost an hour and a half. So, yeah. ARM, I think, is just overvalued, honestly. I don't even have to put this in the calculator to determine it's overvalued. But I can. ARM, they're expected to grow 20%. Um, 15. Let's do 15, 18, 21. Well, the API I use is Yahoo Finance, I'm pretty sure. Pretty sure Yahoo Finance is most of it. I know that's for the financials. I'm not sure about the live stock data though, but let's put in 30 PE ratio, 35, 40. Calculate. Negative returns. Like, I'm just staying away from this company, honestly. Like, this company's $123 billion and they made 800 mil. So let's take a look at Geo. Geo is service provider, finance for secure. So it's pretty much I can't tell if this is a REIT, guys. Let me just look it up. I don't think it's a REIT, but I'm not sure. Wait. Let me see. No, it's definitely not a REIT. But it's definitely a real estate wait, what? So it's just a C Corp. It's just a normal company. I mean, it does real estate, but it's not a REIT. To know if it's a REIT, the main thing, just look at the dividend yield. They have to pay out, I'm pretty sure, 90% in dividends. That's what REITs are for tax benefits. They have to pay out a certain amount in dividend yields. A lot of debt. Me personally, I'm not interested in this company. That's just my belief. But I mean, I don't know. I don't think an intrinsic value calculator would do good for this company. I don't think we'll get an accurate analysis just due to the fact it's a real estate company more. That's my belief. Have I ever tried day trading? Yes, I do day trade here and there. I do day trade. Let me take a look at Duolingo. Duolingo has been interesting, and also someone in the comments said I'm crazy for thinking Duolingo stock will be under 150 by earnings. They said I was crazy, but 144? I don't know, guys. I don't know. They said I was crazy. They said I was crazy when United Health, I said under 250. It's never going to be under $250. Let's look it up. Or also Adobe. Adobe's never going to be under 300. Looking at United Health is at one point 234. So with Duolingo, I did not buy. Here's the thing. I did reanalyze this company. I don't think there's going to be as great returns as I thought, honestly. I did more research into this company, and I kind of figured it looks a bit, I don't know. It's just a bit off to me. 10, 15, 20% growth. Future profit margin. This profit margin, there's something off with the profit margin. Hold up. What is... Let's see. I'm pretty sure I caught this in my video, right, guys? For the ones that watched the Duolingo video, my profit margins were less than 40%, right? Because there was a big tax hit. So their real profit margins like 20%? Like 20? Hopefully I did do this right, guys. Let's do future PE ratio 20. We could do 28, 34, 34, 36. Let's do 36. This is interesting. Guys, did I mess up? Wait a minute. How is... Guys, I messed up on Duolingo. I messed up. I think I messed up here on my analysis. I mean, it did say their profit margin right now. Let me see this again. $25. 25. I mean, I expect them to grow this profit margin, so let's reevaluate this. I think these PE ratios are too low. 25. Let's do 35, 45, honestly. I mean, this is 19% return. So if you expect them to grow at 18%, I mean, it's still very interesting. I think it can be a very interesting company. Let me see this. Did I mess this last video up? So technically I didn't mess it up. I put 34% profit margin. I put 34% for Duolingo. So yeah, that makes sense. 34%. It's not out of realm of possibility. So I think Duolingo is interesting, but am I buying? I'm not sure, guys. Let's take a look at MasterCard. Wait, is this actually MasterCard revenue growth? 16, 12, 12, 6, 11? I don't think they're going to be growing that slow, if I'm being honest, but 9, 12, 15 maybe? 9, 12, and 15. Future profit margin, I expect to stay the same. Let's do this PE ratio. 22, 27, 32. 9.8% return. At what price am I looking? It's definitely under 500. Definitely under 500. I would say 475 is where 480, 475 is where I'd really start to get interested in this company. I think it definitely has to be under $500 though. Okay, guys, this is gonna be the last stock I'm gonna be analyzing. We have Shell. So let's take a look at Shell. Shell has been interesting. I think once again it's gonna be hard for me to analyze a company like an oil company. Guys, look at these shares. My gosh. Share buyback program. They're buying back like crazy. Like insane amount. Buying back 7% a year? Wait. Why is this showing negative 26? I mean, we can just analyze this. It's going to give us... Actually, wait, no. Guys, don't look at that. I messed up. That P ratio should not be that. Let's do 12, 15, 18. 20% return. I think the problem is just you have to... Do you believe in oil companies? That's the main thing. I mean, the one thing is good is they're buying back a lot of shares. That's one thing I like. I've been interested in Marathon. Is it? What is there? Why did I get logged out? Let's take a look at Marathon stock, Marathon Oil. This company has been buying back crazy amounts, guys. Let's put in MRO. Why is it not coming up? MPC. Why is that saying what? So MPC, look at these buybacks, guys. Man. If you want a company that's buying back a lot of shares, buy Marathon Petroleum, guys. What do you mean by food companies? But look at Marathon Oil, 15% buybacks. 15%. Okay, guys, I'm gonna put one more poll in. What do you mean by food companies? Do you mean like restaurant? Me personally, I follow food and beverage companies, but I don't think you're going to get great returns with those companies. So that's just my opinion. That's my opinion. So the poll here is, should I make a video or live with my roommate? So what do you guys think of that? Should I? Also comment what video. My roommate does not really invest. Not really. He's had a let's say troubled past in investing. That's what we'll say. He's lost some money, but um, maybe we could do a video building a portfolio for him. What stock do I find most interesting right now? I would say Adobe or Meta. Um, Actually, Sprouts Farmers Market is also very interesting. Adobe, Meta, Sprouts Farmers Market. Thoughts on crypto? Me personally, I avoid crypto. I mean, I'm not saying you shouldn't necessarily invest in it. I mean, I don't think you will go bad. It would be bad if you invest. Me personally, I just don't invest in it. I don't believe in it. Um, I don't believe in crypto. The reason I say this is just because there's nothing really backing it. A stock has a company backing it, but crypto doesn't have any cash flow behind the cryptocurrency. So that's my belief. So, guys, I think this is going to be the end of the stream. Thank you guys for watching. Please subscribe, hit the like button, comment down below, and we'll try and stream some more. So, thank you guys, and see you.